If you're about to deregister your company because of that ASIC annual fee, you might be about to throw away tax losses, franking credits, and future options that are worth far more than a yearly renewal. Give me 8 minutes and I'll show you exactly what to check before you press the button. Plus, the quick, easy, correct way to do it if you really should close the company. Let's make a smart decision today. Hi, I'm Puneet Singh, Principal Accountant at Nanak Accountants and Associates. We help thousands of Australians each year with ASIC compliance, tax, and business structures. This is general information. Get advice for your situation, but this checklist will save you time, money, and a lot of trouble. If you find this video useful, hit subscribe. We publish practical, no-nonsense video for business owners every week. Why people rush to deregister? Why that might be risky for them to close the company? Most calls start like this. Puneet, I don't use company anymore. Why should I pay ASIC fee again? Fair question. ASIC sends the annual statement near your company anniversary. You got 2 months to pay and it's easy to think that I don't use anymore. Just close it. I don't want to pay ASIC fee. But closing too fast can cost you real money. Here are the 3-point check that we run for clients. 3 check before you even consider deregistration. Check 1. Carried forward tax losses. If your company traded in past, it may have tax losses. Keep the same shareholder and you can often use those losses in future events, even if the business activity changes. Deregistration means losses gone forever. I've seen people walk away with 6 figures in value without realizing it. Now, second check we do franking credits. If your company paid tax in earlier years, you might have a franking credits. Before closing, you can declare a fully franked dividend and depending on the shareholder's tax bracket or a family trust distribution, cash back some of that value. If you deregister too soon, those credits will die with the company. You won't be able to get back. Check number 3, future use. Today you're done with the business. Tomorrow you might want a fresh venture or setting up a trustee company for a family trust or setting up self-managed super fund. Paying $300 a year versus $1,500 to set up a new company later. Sometimes it's smarter to park the company for a year or 2. If any of those 3 ring a bell, don't close yet. Get advice, run the numbers. And if you're so sure that you wanted to close, here is the correct ASIC process. If you have checked everything and still want to go out, here is a clean way to do it. Voluntarily registration. But before that, you must meet all these conditions. All shareholders agree to deregister. You should not have more than $1,000 assets in the company, including the bank as well. No liabilities, which means no creditors, no lease obligations, no ATO debts. Director or shareholder's loan can be formally waived. No unpaid ASIC fees. Start the process before the renewal falls due or you'll still owe the year fee to the ASIC otherwise. No legal proceeding going on in the company. Company has stopped trading. They're not trading anymore. Now, how to lodge file form 6010 online. You can do it via agent or you can do with ASIC directly. It costs $50. ASIC then list your company in the ASIC gadget for 2 months. If nobody objects, ASIC deregister it. Anything still sitting in your company's name, bank accounts, refunds, bonds, a car, can end up forfeited and sent to unclaimed money. That's not your assets now. Do a final sweep before you lodge. Clean up with the ATO so you don't have to get a ghost company. After deregistration, ASIC notifies the ATO and they usually cancel the TFN. But I often see ABN and GST FBT registration left over. If you would like 10 minutes pre-check before you close the company, losses, credits, ABN cancellations, we do this every day. Subscribe for more straight talk guides on ASIC, BAS, tax planning, and business structures. Drop your questions in comments. I read all of them. Thanks for watching. I'll see you in the next video. Thank you.